I think today we talked about three things that are pretty important for dairy markets in 2023. The first thing is milk production. I think we're at a very interesting place in the cycle where milk price recovery this past summer I think is going to fuel a little bit of growth here over the near term, but we see that kind of margins are coming down. I think that cycle could flip pretty quickly to where we'll have less milk by the middle of this year. So I think lower prices early, higher prices late, kind of a traditional year from that perspective. So I think that milk production situation is certainly important. And then the other thing, I think maybe the most important thing for 2023 for dairy markets is U.S. exports. The U.S. had a phenomenal 2022 export-wise. We were going to export over $9.5 billion worth of product. Almost 1 billion pounds of cheese left the country in 2022. And that's great, but I think we're going to have some challenges in 2023 because we went from being the cheapest cheese in the world and hey, let's go get U.S. cheese, to now where European cheese and New Zealand cheese is much, much more competitive with the U.S. So I think we're going to struggle a little bit to export at those volumes. And so the question becomes if you go from 85 million pounds of cheese a month exported down to 70, it doesn't sound like a big deal, but what are we going to do with those 15 million pounds that don't leave the country? And so I think that's kind of the difference between a $1.70, $1.75 cheese market and a $2, $2.10 cheese market is how those exports fare. Generally speaking, Midwestern dairy producers do well in high feed price times. So when corn is high priced, which it is today, generally Midwestern dairy farmers don't pay the full price compared to their competitors in the West who are paying that price plus freight plus. And so right now today, the Wisconsin cost of production is $3 to $3.50 per hundredweight cheaper than California. And that's something we've never seen before. And so we think that if there's growth, it's more likely to be in the Midwest than in the West. I'm not saying that every farm is having a great time of it in Wisconsin or in the Midwest, but I think comparatively speaking, competitively speaking, the Midwest is well positioned from a cost perspective compared to the West and the East. There's never been an easy year in the history of dairy farming for many reasons. I would say that from a 2023 perspective, I think you're gonna have to really mind your P's and Q's in the sense of, or cross your T's and dot your I's, because I think costs that were escalating over the course of 2022 will be fully felt in 2023. And we're gonna start off the year with lower milk prices. I think we'll recover by the middle to the end of the year, but I think that you're gonna have to really watch the margins here because I think it's gonna be a little bit tight early. There's hope. I'm optimistic from a farmer perspective for the end of the year, but I think there's risk to margin, income, and higher costs over the near term.